Hey, Blockhead Traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take these opinions and form your own financial conclusions and make your own financial decisions. Today is Wednesday, January 11th, 2023, and this is Blockhead Traders Weekly. In this week's episode, I am joined by fellow Blockhead trader Viper XL 007, and we are back with our 1% play discussions. And Viper, the market is looking up so far this year. I don't want to get my hopes up, but we'll talk a little bit about the market and a little bit about what we're trading this episode. Before we hop to that, I want to give a shout out to our Discord, link in the description below. You can hop in there, say hello to myself, Viper, any of the other Blockhead traders. Love to hear from you. Love to hear what you're trading. Love to hear what you're interested in. You can also find a link to thetagang.com/sprocket888, where I post each and every one of my trades, the good, the bad, and the ugly. Also, this is streamed on a podcast, so you can listen to the audio version wherever you're headed, wherever you get your podcasts. And if you can't find it there, leave a comment and we will get it there. But let's hop to this week's content, Viper, the markets. I don't really fully understand what has happened, other than maybe people are just kind of anxious for something good to happen. And so there's been quite a bit of buying lately, pretty broad-based buying too. I mean, multiple days where the indexes are up well over 1%, just kind of small retracements. And it's a welcome sign. I don't know, if it'll keep up forever, but it feels pretty good right now. Not a lot happening from the Fed and interest rate decisions until next month. It's next time the Federal Reserve meets. Yes, there's been a few comments about they're still out there relatively hawkish, saying, hey, we're going to keep interest rates higher. We might keep them longer than you might think. The market largely seems to be shrugging a lot of that off, really banking on the fact that maybe interest rates are actually, not interest rates, but inflation is actually coming down tomorrow, which this will all be after you hear this. It'll already be out, so we'll see what happens. But tomorrow is the CPI, or Consumer Price Index number, comes out for the month, and a lot of speculation around where that's going to land. Then the day after that really kicks off earnings seasons, with the financial banks starting to report. And then next week is just a gauntlet of earnings coming of all the big names out there. So next week should be super exciting. For me, I'm kind of a little bit apprehensive about things. I mean, I'm a little scarred from 22 a little bit. So many false hopes, and I don't want to get my hopes dashed here. So I personally don't have a trade this week. I'm going to kind of let the CPI number come out, let the market react to that. I'm going to let earnings start and see where it goes. But, we talk about binary events as just an accelerant. And to be honest, I have no idea where this accelerant is going. Is it going up, down? What's happening tomorrow? I don't have good confidence one way or another. So in times of uncertainty, keeping on the sideline is a valid play.
It is. And as far as what the heck is going on, I got 3 words for you. Tax loss harvesting. That is where my brain goes as far as what we're seeing. Absolutely not an educated perspective, but I mean, the logic is there to me that 2022 was the year of the bear, and it was down, down, down. And we all were like, oh, Santa rally, it's going to do it. And then Santa was like, no, it's a silent night. And nothing happened, which now in hindsight, I mean, that makes sense. You have a year of down, down, down. And so that the lack of a Santa rally was the first time I was like, I mean, it makes sense to just liquidate, sell stuff. So for those who don't know, tax loss harvesting, not a tax professional, not a financial professional, all that's good stuff. But tax loss harvesting is basically when you're down on a position, you sell it, you take the loss, and then that way you can claim the loss on taxes in the next year. And so that's been my personal thesis, not even thesis, just opinion of there was a lot of tax loss harvesting. I mean, over in the crypto world, you have Michael Saylor, who is just this guy that just owns a insane amount of Bitcoin. I mean, even he sold like 20,000 Bitcoin in a tax loss harvesting event. So now we get into the new year. Everybody's fresh on feeling like we understand where we're at. I mean, everybody's, we seem to be on a lot of the same page as far as what's ahead, the pain that's still ahead, the recession that's still ahead, the situation with the rate hikes and what that looks like going forward. And a lot of people are anticipating, relief of that by the end of the year. So, again, continuing that personal opinion that December was a tax loss harvesting month. Now, as we get 30 to 60 days out from those losses harvested, if people want to re-enter those positions and avoid any wash trade rules, or just go to other positions that people are buying in. And so I feel like that's a lot of this pump here. I mean, it'd be really interesting if I would have thought of this ahead of time and gone back and looked at previous data of like when we get a Santa rally, when we have a strong year, because there's a lot of that talk going around of like, oh, after the new year, there's a New Year's crash or things cool off into the new year. Well, that would make sense if everything was really hot the previous year because you got all these gains and now you're in a new year and you have a tax bill coming up. So sell off to prepare for that tax bill. Makes sense to me that we kind of have this yin and yang here of two scenarios.
It's always possible. I don't know. What do you think? Looking back at 22, the market high on the S&P was in these first 2 weeks. So, like, I'm just.
Yeah, I mean, so to your point though, I'm not really looking for too many plays going into CPI data and going into these binary events. There's nothing setting up as like, ooh, this is something I want to take a gamble on because, the with everything as elevated or running up as it has, I mean, that would put the thesis on a binary event could trigger the retrace, but it doesn't feel like that. So best to just wait and watch for the setups. I mean, if there was something I was watching that could use the accelerant, then sure, I might take a small position to see where it goes. But currently, I'm in the same boat. I'm working my way through these 1% plays we've been doing, and also nothing is feeling like I gotta jump on this certain position for this binary event to catch some accelerant. So we'll see.
Yeah, definitely we will. One thing that I kind of alluded to there was just the barrage of earnings that are coming next week. So you can bet, one of the exciting things that I love to do with options and playing options is a lot of the earnings plays, particularly verticals. In my opinion, in earnings are a really fun and I'm going to call it kind of safe-ish way to play earnings. You get a lot of the excitement about what's it going to do, what's it going to do. You got some skin in the game, but because you play a vertical, you've capped your upside and your downside. I will caution playing earnings with straight shares because depending on where you're trading, you might be forced in after hours. You're open to significant gap up, gap down. Of course, you're still with that with option plays too. It's just with option plays, you can define your max loss, max gain, and it doesn't matter. Market close, market open, you're protected with those ranges. So I'm gonna wager that I'm gonna find an earnings trade coming up next week to toss you guys in a 1% review, which will be kind of cool because we haven't really done an earnings trade since we really started a lot of these 1% plays. So speaking of earnings, we'll flip over here to the 1% play status. Viper, you can keep your eyes glued to the ticker on Friday of Citigroup. So if you'll remember on our 1% trade a while back, we put a $19 scratcher on Citigroup. This thing has kind of been rising. We put that thing on at the 55 call. I think today we were close to $50 on Citigroup. So if this thing hits rocket fuel on Friday, that will likely be a step off the train for me on that play. I don't think that's one I want to hold long term. Really, it was a lotto play, and if we hit the mark there, I mean, we got till March, so it's not like there's any rush to it. But if that thing goes in the money, we bought that thing way outside the money a while back. So keep an eye on that, guys, as far as earnings play. It wasn't designed to be an earnings play trade, but the price on that underlying is really starting to get closer to the strike, and earnings are this Friday. So we'll see what happens. Looking at the other 1% trade, this is where we're at. You'll notice we got 2 new closes, and we want to spend a little bit of time talking to you, a little retrospective on those closes. First one is that Cole's inaugural play, going back to the roots of the first option trade I played. I said, I'm going to go back to the well, and the well was dry. So we'll do a little retrospective there. I lost 100% of that play, which was the risk going into it. So I lost $70. That's 233%. That expired worthless last Friday. That was the option expiration I was on. And so that one is out of there. The other one, which was also the one that we did the most recent episode on with SPLK. Viper was kind of in that, out of that, scaling back his trade. Well, he is now fully out of SPLK. He did eke out a win, so I guess he's batting 500 now. Good on you, Viper. You're sitting up. Actually, your total profit here. You lost $1.02. You gained $1.89. Pretty soon you'll be getting maybe a Happy Meal or maybe ordering from the dollar menu at Wendy's. I don't know. Do Wendy's still have a dollar menu, or do they have to raise that with inflation?
The path to the moon is paved with pennies.
A penny saved is a penny earned.
So clearly what the main takeaway here is I've clearly misunderstood the assignment of the 1% challenge. I'm losing 1.8%. I'm gaining 1.08%. Were we supposed to be shooting for higher P&L percentages here?
Yes, Viper. We're not going to make it on 1% returns on our plays.
Oh, gotcha.
Yeah, so let's do a little retrospective here. So I'm going to jump over to KSS since that was my play, and I kind of want to go into, hey, what went wrong here? What did I do, or what didn't I do? And I'll say a lot of times when I enter these trades, I am ready to ride this thing to expiration, ready to go to the max loss. Like that's one of the prerequisites for getting into the trade, saying, are you prepared for the max loss? And that is true. When I entered this, that was the case. However, if you go back, I put a blog post out there at blockheadtraders.com on this exact setup, what I was thinking, what was I going for? We even go back to the episode, and I have the theory that I was going with. And my theory was we were on this upward trend, and I wanted to sell a put. I sold the put at a level that I thought was likely to prevent, yes, we might retrace back to it. I thought we would bounce off of it, that level, and then kind of continue up. So I was okay for a retrace. And the bit that I think I would like to start adding, and you actually heard me mention it on the MCL trade, which I'll also talk about it a little bit. You have a thesis when you enter it. And my thesis was we were going up, but you have something that will tell you your thesis is broken. And I think, we even talked about the price action here of this, where I said, oh, look, I've got this profit or break even mark above where this kind of most recent swing up started. So wherever you think it is, I probably would plot it around the 28.40 mark. As, hey, this was where the most recent swing up was. So losing that level should have been a potential break in my thesis. And hey, maybe this thing is not going up. And right around that level, you can see we gapped down almost to that level. We then lost that level. This would have been an opportune time to say the thesis is broken. You're going to lose money on this trade. Take the money off the table that you have to reduce your loss. You're still okay taking 100% loss, but this is a way that says your thesis is broken. Rethink. And I could have taken off at that time for less than a loss. And notice what the price action did after that gap down to this level around the 28.20 mark. We fell even further. We rallied back up to it. Then it acted as resistance, and down further we went. And so at that point, we're deep in the money. I would say that is probably the one takeaway I would say from this is when you enter your trade, you have your thesis. You're expecting, hey, I'm cool with max loss if it happens. But in this case, our thesis was broken early. I could have buttoned things up a little bit sooner and minimized that loss. And Viper, I don't know if you have any thoughts on some of that before we kind of switch over to your retrospective on the SPLK trade.
Yeah, I mean it rings true. Like, I mean, it's hard because you set something up, you have conviction in the play, and when things start not going well, sometimes it's hard to just look at it from a fresh perspective of, wait, this isn't going the way it was supposed to or the way I wanted it to, and not having that bailout, or I don't even know. I mean, because like you said, you were okay taking, you were okay with the risk, and so there's definitely a mental tug of war that happens where on one hand, hey, I'm okay with taking the risk, and the only way I'm going to get better at this is if I let it roll out to its natural conclusion, and then I have determinism going forward, versus do I get emotional and jump off the ride because things aren't going my way? And so I guess I don't have a lot of solid thoughts other than acknowledging that this is a recurring struggle that will regularly come up when it comes to when things aren't going the way you wanted or when they're going incredibly the way you want. I struggle with it a lot as well.
Yeah, no doubt. Well, SPLK, what's going on in the SPLK world for you? How did that end up? I mean, you turned green. Nobody got in trouble for a profit, but
yeah,
talk us through it.
So, and actually, this is the plug for the Discord. I would not be green if it wasn't for conversation in the Discord. So I rewound the clock a little bit here just to show, just a reminder of the setup, what I saw, what I liked. This green box down here was in what I thought was a good entry. I mean, still is technically. So I got in at 86.98 here and we ran up. My original thesis was expecting, I don't remember exactly. I don't think I have the line on here, but I was looking for a stronger, yeah, here we go. So I was targeting this previous high, the previous local high up here around 99, almost 100. And I was like, oh, cool. I'll jump in here, 86. I'll just target 99. Like, that's not a big deal. like, there's not price discovery that needs to happen along there, or that I was even too aggressive on selecting this high. This is a, 99.85 here. This is a reasonable profit target. However, it is completely irrational to be my first, given the entry point here, given the way price moves and all that good stuff. So nonetheless, we can see here, I entered and then we ran up and I was feeling pretty good. And I was like, you know what? I like this. Let's keep going. And I could have stepped off with some profit up here. And as it was retracing, that's when I started having the discussion in our Discord with one of our users in there. And just that, that fresh perspective of what he saw. And what he saw, if we drop this box in here, he said, this is, to him, this was the box that is the primary first step. where maybe we get past it, but you can see $91 is an awful lot less than $99. So as he talked me through his, his how he got to this conclusion and walked me through the chart a little bit, I started to understand and was like, yeah, I think I agree. Like I should have seen that. So what we can see here is this yellow line here is when I actually closed one of the shares in profit. So 89.20, closed that after hours because I was like, dang, like he had this, he had good logic behind this, and we're getting resistance off of it. I just need to lock in some profit. What I should have done when we hit the range for profit target. So that happened, and then if we fast forward here on the chart just a little bit, we can see we gapped down the next morning. So I was feeling fantastic for for listening, learning, and heeding that call, and for just going into after hours and just taking it off the table, because we gapped down and then we started really rushing down back towards my entry. And so we can see, even though I adjusted my stop loss, as you might recall from the previous episode, my original stop loss was down here, 82.68. After I took that profit, I was like, you know what? I'm going to bring this up a little bit. My stop loss, I just don't want to mess around with a pure break even. I just need the win, even if it's a 1% win. It's a mental game when you're getting back in the game, or if you're playing along as just starting. Take the wins. I mean, I can't even tell you, just this move here, this protection of having sold that after hours and then getting that gap down in the morning. It wasn't that much money, but it was relief. And so as you see these candles crashing, I was like, you know what? We got below my entry. I was still marginally about 1.08% still in profit. And I was like, you know what? I'm done. Like I want to walk away with a winner here. Again, playing that mental game, trying to build up that confidence. So I did. And if we keep fast forwarding just a little bit more, we come down and boom, we hit all the stop targets, all the stop losses. We hit the pulled up one. We would have hit the original one. So that's where we end the chart and we walk away. We don't keep playing this out and see how it came right back up. And it's actually doing pretty well now. But that's kidding is like, I'm not worried. I'm not, that's fine. It can do whatever it wants. I'm very, very pleased with a 1.08% win. All things considered, the way that played out, I took a lesson learned on what I missed on my initial chart reading. I mitigated my loss. I took the win. And regardless of what the chart does, it would have been a full-on loss at any rate because of how hard this dipped down before going back up. So I'm quite content with that. And now I'll start looking for 2% profit plays.
Yes, one step at a time. 1, 2, and then maybe you'll get to 3 someday.
Yeah.
Kind of continuing on this theme, as far as, taking the profits when you can, taking profits when something doesn't feel right anymore, I shouldn't say feel right anymore. Try to have all this stuff ironed out before you get in so you're not actually operating on feeling. I do want to kind of jump to our running play that's still open right now. MCL, these are micro crude oil futures. And we actually talked about this in last week's episode. And we said, oh, look at this here. The thesis broke. So the original thesis of this trade was this blue band that oil was trading in. We were at the upper range of this band or approaching it. So I said, you know what? We're at the upper range. Let's trade this bearish. Let's buy some puts. A put vertical, the volatility was there. It made sense to buy a put vertical. So we want the trade to go down. That's that green box towards the bottom. And sure enough, we started going down, and then we rallied up and we broke through the blue. And I said, oh boy, thesis now is starting to break down. And, didn't really panic, didn't really talk much about it. And then last week we had started recording and we had already, gotten way out here and we dropped. And we were right down here at this blue marker. and which is the top of the channel where we crashed down to it. And I specifically said, hey, take a look at this. Oil, we are still in the red region of the chart, but we are at a 30% profit because volatility was increasing, and we bought the options originally with low volatility because the IV was low, implied volatility was low, so it made sense to buy them. With that rally up and rapid crash down, volatility was spiking, increasing the value of the option, so we could sell it back for a profit. And I specifically even said, this is really where your thesis is blown. We should consider taking the profit here and exiting, because one, we're not even reducing loss, we're actually walking away green. And I said, for experimental purposes, we're going to leave it on. And I said, my latest theories here on how this is kind of trading is, I bet we're going to bounce off this upper blue range and kind of go back the other way, because when we break out of these channels, this is the current strategy I'm trying. It's not tried and true. I'm literally learning it right now. Is when you break out, you're in no man's land until a new pattern and a new trend has formed. So at this point, thesis is blown, trend is gone, don't know what it's doing, grab the profit, close the trade. That would have been the prudent thing to do. I'm still in it. I am now down 96% on the trade presently because we started rallying back up. There's not much time left. You can see the end of the boxes approaching. With options, the less time you have left, the less less premium is left in the options. Because I bought these options, they will slowly decay to no value whatsoever. So this just goes back to that reminder that have a trade thesis, have an exit plan. Again, the exit plan for all these things was always you're cool with 100% loss. But the piece that I believe needs to be added is your trade thesis needs to be part of the trade. And when your trade thesis is broken, it might be time to start looking for a way to minimize the loss. I mean, I think I said it last week's episode. The difference between bad traders, good traders, and great traders is risk mitigation. It's really not about how can they find the plays, how do they spot what to trade in. It's when you get in a losing situation, when the trade isn't going your way, how do you mitigate your risk?
Yeah, and I would add to somebody who's just straight trading shares like my plays are doing currently. The whole, if your trade thesis is broken, maybe think about getting off. It's a little less common there, because basically when you're just straight trading shares, you should set your stop loss to be at your invalidation. Thus, that's your thesis broken point. That's your stop loss. You get off. And then forward, all you do is just bump your stop loss up if you want, a little trailer, so that way you can guarantee some profits as you go. But the point of recognizing when to get out and whatnot is much, much more important on these options plays, because just like you just showed, you were in the red, but you were still green, and the thesis was broken. That confluence of those two things. It's not as clear in an options play as a stop loss, because you have these multifaceted 3D chess, parameters that are shifting around on you. You really have to continue to think through that process, like you said, of identifying where's my invalidation, and then how's the whole play looking at the various different invalidation points.
Yeah, actually, that's an excellent point. I didn't really kind of consider that with the straight trades and your price target and your stop loss. Is when you put that trade on, you're putting your price target, take profit orders in. You're also putting in your stop loss, and those really are your thesis. If you hit your stop loss, that is your broken thesis, and that is your exit ramp. So that actually is a really good call out, where option trades don't typically, at least the way I do them, don't typically have that. And even in people I follow, I don't really see a lot of limit orders and stop orders used in the options world.
Yeah. And one other thing for somebody who might still be struggling to grasp options or, just learning them. Can you briefly explain the difference? So like your lost play, you lost $70, the completed one, but it was a 233% loss. And like you just said, you're down on this play on MCL, you're down 96%. And there's a lot of confusion as to like, well, how do you lose more than 100%? So what does that P&L percent actually correlate to?
Yeah. So it's a little different between buying and selling options. And so when you buy options, you effectively can never lose more than 100%. 100% would be your max loss because you basically just, the option goes to worthless. So you spend $20 on it, goes to zero, you've lost $20, you've lost 100%. So when you buy options, you cannot lose more than 100%. Now, when you sell options, you are basically writing an insurance policy that says, I am going to collect some premium from you. And in the event that the storm comes, the rain comes, I promise that I will fulfill your claim to what I sold. And so the value in what you sell, you might not collect as the full value of it. So in the example of the Kohl's trade that we put in, I sold $100 worth of insurance to somebody, don't know who it was, and said, look, if this thing doesn't go your way, I am going to cover your loss, and I will give you $100. Effectively, that's what that trade was. And what happened was, in order for them to have that insurance, they said, well, I don't really know how this is going to pan out, so I'm going to give you $30 for you to give me $100 in coverage. Now, if they never needed that insurance, they lose that 100%. They lost their $30. They've 100% loss. I would have a large gain because I would have made 30%. I risked $100. I made $30. My return was 30%. Now you might think, well, why would you ever do that if you have the capability to lose more than you invested? And that goes to the probability of success. So I had a 70% chance when I entered that trade that they were not going to need my insurance policy. So because I collected $30, I had to then pay out $100 to them, netting me a loss of $70. The difference between, I paid out $100, but I collected 30 from them. So I pretty much gave them their 30 back plus 70 more. And that's how you arrive at you lost more than you invested because the investment you made was the money you collected. And does that kind of help explain it a little bit?
Yeah, I think so. And the other thing that came to mind while you were saying that was just that idea of probability of success. Because obviously, again, straight trading shares, we talk about this 3-to-1 ratio of risk 1 to gain 3 and all that kind of stuff. And quite honestly, that's because that's the only ratio you can really have to go on when you're straight naked spot trading shares. Because at least in a basic setup, you don't have all of these stats and Greek letters and things like that behind you. Its price is going to go up or it's going to go down, and it's maybe going to go to this range or maybe going to drop to this range, and there is no built-in mechanism to have these probabilities charted out for you. So that really just kind of again speaks to highlighting the difference, because at least periodically I'll just keep focusing on that, because I know that's a real hard point to understanding options when your mentality, as long as you've ever known about the stock market, has been buy low, sell high, or vice versa if you want to short. And that's a big dimensional shift over into options. That doesn't mean it's super difficult. We try to show some simpler ways to use them, but it is a big mentality shift to get over there.
Yeah, it's not trivial.
I don't ever want to sell it as difficult, because once you really kind of understand it, especially I think if you have more of a mathematical background or technical background, not because you need it, because it's complicated. I've read a lot of stories about people that like trading options. There's a interesting series that Tasty Trade puts out called Rising Star. Not a plug for them really at all, but go look at some of the YouTube videos if you look up Rising Star and Tasty Trade. And I was really surprised with the number of people that they brought onto that show, which is essentially just people that kind of discovered options trading and then got interested in it once they really understood the mechanics behind it. And there is a disproportionately high number of engineers that basically are rising stars, where they took it, embraced it, and did really well. And then they go on the show and they visit it. There's also other people that are, like working blue collar type people that just started doing it. And it's a really cool series to listen to, at least just for, I don't know, sometimes I like that not really inspirational, but like relatable type content. So anyway, it's good stuff. So that brings us to the end of this week's episode. Again, 1% trades going along there. Hopefully Viper decides that it's okay to profit or lose more than 1% soon. I'm taking a little step back from the sidelines. We wait a couple of binary events out here. Certainly, it's kind of ironic, actually, Viper. I'm going to take a step away from these two binary events coming tomorrow and Friday, and then I'm going to start looking to play a binary event next week with earnings. So I don't know, maybe I'm just a confused individual, but I'll look for some volatility setups and stuff like that in earnings, because those are very exciting ways to trade. We'll put one of them on, we'll talk you through it, and you'll get to understand some of the mechanics. Otherwise, until then, have fun out there in the markets. Good luck. And remember, think outside the block.